Folks, this may be the perfect time to add these two consumer staple stocks into your portfolio ahead of the holidays. Want to know why I'm so excited? Watch the video. The present time, consumer discretionary and tech are ruling the market. But, if you look under the hood, you will notice that put-to-call ratio continues to make lower lows, which tells me that consumer discretionary is going to pull back in favor of the broader market. Matter of fact, most of the drama surrounding earnings and chip stocks is already priced into the market. Look, I've been talking about it for 6 months now? And in my opinion, we're going to see strong sector rotation moving into higher dividend yielding names that offer investors a bit more safety and dividend yield at the expense of potential volatility. Now, this happened earlier in the year, in the middle of summer, and I believe we're going to see a similar pattern out of consumer staple stocks, which as a sector as a whole has risen from the weakest of the 11 sectors to the 6th spot in recent weeks. I think it may be in the 5th spot now. Now, later in the week, we have the consumer sentiment and GDP. That's tomorrow from the Fed. And there's a good chance the Fed will begin pulling back the purchase of bonds after the report is released. Now, if that happens, I'm expecting a shift into a few top-performing consumer staple stocks, which you need to know about right now. First one, Procter & Gamble. Procter & Gamble is engaged in manufacturing sale of a wide range of branded consumer packaged goods. The company operates 5 segments: beauty, grooming, healthcare, fabric care, and home care, baby care, and family care. Organic sales growth for P&G hit a new high past year with a very impressive 6% growth. For a huge conglomerate, that's pretty good. The company reported nearly $5 billion in operating cash flow in the most recent quarter, and it converted much of it into free cash. It's easy to see why the company's market capitalization stands at over $350 billion. Last 4 quarters, we've seen better than expected estimates and surprises. We talked about the stock back in July 16th when it was near the $140 level, and I'm liking it even more now than before. Profit target, $165 per share over the next quarter. Next stock, I really like this stock, and this was one of my favorite summer consumer staple stocks. General Mills, ticker symbol GIS. I always confuse this ticker symbol with Goldman Sachs, which is GS, but it ain't no Goldman Sachs. It's GIS. This is a leading global food company that serves the world by making food that people love. Its brands include Cheerios, Annie's, Yoplait, Nature Valley, Fiber One, Betty Crocker, Pillsbury. I think I just named all of my favorites. General Mills reported 99 cents per share in profits from $4.5 billion in sales from the first quarter of 2022. Sales jumped approximately 4% over the year-ago price. The company maintained its full-year outlook of comparable sales growth of between 1% and 3%, which again, for a huge conglomerate in this economy is solid. Now, while these numbers are not all that impressive, the stock appears to be very stable and offers a dividend over 3% this year. And remember what I say, we're going to move from tech to high dividend stocks because inflationary pressure is here. Price of the stock has been stale and non-eventful much of the year since market cap has been moving into consumer discretionary and speculative stocks with interest rates near historic lows. But, I believe this will change over the next few months with value taking lead over Wall Street and investors seeking more upside from value stocks instead. I have a profit target of $72 over the next 12 weeks, which is likely if we begin seeing increased rotation into value stocks and out of high-flying speculative stocks, which I believe is already happening. Hope that helps. Folks, it's no secret that inflation is running rampant. 30-year high? Really? 30-year high? But it's transitory. Can't hear enough of that. But what most people don't know is that Wall Street knows one of the best ways to beat it by flooding specific stocks set to outperform during inflation. Thanks to this little-known trading tactic that I found, I've been able to get in on them before Wall Street does. In fact, I've already seen gains like 36.92% on APTV, 7 days, 53.66% gain on PWR in 4 days. Even 83% plus in Albemarle in 6 days. And all of this happened in the last month. We've had 7 for 7 winners in a row. Now, I want to give everyday traders, folks just like you, exact ticker of the stock that just triggered my brand new discovery. Click on the link below to learn how to spot my number one stock right now. And make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of the market. Be the first to be notified when I post my next video for you guys.